Hi, and welcome to Boom, It's on the Blockchain. My name is Alistair Caithness. It is currently 10 a.m. in San Diego. It is 12 in Texas, and it is 6 o'clock over in Inverness in Scotland. So today we've got an exciting show. I'm going to bring in our co-host today, Garrett. How are you, Garrett?
I'm doing good. How are you today, Alistair?
Yeah, good. Thanks, Garrett. Good. And then basically the other guest who we're bringing in today is Ron Costa. So I'll just bring you in straight away, Ron. Hi, Ron. How's it going?
Good, good. Thanks for having me on. Looking forward to today's show.
Perfect. So we'll just crack things off then. So Ron's been involved in the crowdfunding space in it's developed. He's now involved in tokenization, blockchain. He's been running a successful podcast out of Las Vegas now for a number of years, Ron. So just give a bit of background about yourself.
Yeah, thanks, Alistair. I'm originally from New York. I moved out to Vegas about maybe 15 years ago. Love it out here. It's great. And I started getting into the commercial real estate world here in Las Vegas. Then all of a sudden, we found out about the Jobs Act and switched our focus over to crowdfunding, started a crowdfunding company, got into that a little bit. And then somebody told me about podcasting, and I kind of looked into that, and I really started to enjoy that. So we started up a crowdfunding podcast called Mapable USA, and we interviewed people who are in the crowdfunding space, both as investors and as issuers and people involved. And even that has just exploded into technology and blockchain. And I believe that's how we met you, Alistair. We had you on a couple of times. But the show is fun to produce, and it's really informative. And I think that the whole crowdfunding universe basically is still in its infancy, and we're going to see a lot of movement, especially in the tech end of it.
Yeah, so just give a bit of background in terms of when did you run your first podcast then?
We did our first show about 2 years ago, and we started off doing, again, just basically interviewing issuers on that. And it was a whole new thing. You know, we had to learn podcasting, we had to learn how to edit and do all the show notes and this and that. And I started doing this with a few other people, and then I met Vickie Huchmala, who's been doing the co-hosting ever since. She didn't do the first couple of shows, but she's done the shows afterwards. And now fast forward a couple of years, and we have, I think we may have about 200 episodes now at this point. So it's been quite successful, and it's been fun. And we get to meet a lot of people in the industry who know a lot of good things.
Mm-hmm. Yeah. So just give a bit of background to some of the guests you've had on there. So I know you've had on Darren Marble before, who was key in terms of the very first crowdfunding project that went out there under Reg A. Exactly.
Darren Marble is a visionary in the crowdfunding space. We had him on the show when he was doing a company called CrowdFundX, and he's since moved on to a company called Issuance, which does a lot of the crowdfunding portal work. And now he's got this show called Going Public, which is streamable on Entrepreneur. We interviewed him on that show before it even went live. So Darren Marble's been a great guest on that show. We've interviewed people like Mark Alenowitz, who does the Upstream platform. They're doing NFTs. They're doing all kinds of great stuff on the blockchain. They're doing tokenization on the blockchain. We've interviewed real estate people such as Neil Bauer, who does real estate syndication, and a couple other interesting projects. We got a guy out who's doing autonomous robots. William Lee. We did his podcast. It just goes on. And of course, Alistair, we've had you on a number of times too. So we really have been very lucky with the guests we've had on the show. And they're all CEOs, and they're all people who are decision makers, basically.
Yeah. So what have, in terms of you developing your type of projects, what have you seen change in the market space since you've been involved in it? I think it's more than 2 years, so I think it may be 3 or 4 years, is it not, since you've been doing the podcast?
Yeah. The big change basically is it's all education. People look at this crowdfunding space, and it's changed a lot since it first started, even with the Jobs Act. Some people are scared about it. They don't understand it well. They don't understand the rules involved in it. There's a lot of issues in terms of raising money and throwing the SEC. And now with blockchain too, blockchain is being used as a crowdfunding device too. And it's not as simple as just like raising money. You have to worry about all kinds of things, and specifically whether or not these are securities or not. And that's something that people don't want to address. They don't want to address that issue that, well, maybe we have to worry about securities violations on these raises too, especially in the blockchain world, because tokenization is so new. And Alistair, the tokenization part of it has really been the big change on it, because nobody thought to do this even a year ago. And now the technology is out there on the blockchain. People look at it, and again, it makes a whole lot of sense theoretically, but the learning curve is there. There's the adoption aspect of it that's unfortunately a little slow. So you got to get out there with the info. You got to teach people what it's all about. Get rid of that fear factor a little bit, and it all comes through education. And that's why you need podcasts like this and others, because it shows people, well, I got to learn this stuff, and maybe this is something that we should be looking into, especially from a real estate perspective too, by the way.
Yeah. So what are your thoughts on it, Garrett?
Yeah, it's blockchain is a very interesting space. I think to what Ron was saying, I think that it's been kind of the story for a long time now. I think that the U.S. is at a point where we kind of have to make a decision on how the regulation is going to look for blockchain and cryptocurrency, because it is inherently, I think, different from anything that's come in the past. A lot of people have opted to just leave the United States. I mean, simply, there is a whole world of different laws and regulations that are probably a little bit more accommodating. El Salvador is probably a great example. I get where, some of these things maybe they're trying to bunch them in with older securities laws or whatever, but it scares a lot of people, and a lot of people just leave. I mean, I remember back, almost 10 years ago, Roger Ver renounced his citizenship and just left. He just went to Japan. And then, if you look at the case of Sam Bankman-Fried, I mean, that guy, he just left. I mean, he went to Hong Kong and now he's in the Bahamas. I mean, it's like, he's donating, hand over fist and cash to Biden too, to, keep his nose clean. But it's interesting, just how different people choose to handle it. But I would really hope that, there is some sort of framework that eventually comes for the U.S. to help, make us the premium in the world for doing this type of stuff. I don't know if it will be, if it will be crowdfunding. I don't know if there will be another wave of maybe regulated ICOs in the future. That's something that kind of died out after 2017, but we'll see.
Yeah, I think for people to understand as well that, when the Reg A started coming along, so that was a change in the Jobs Act that essentially allowed non-accredited investors to invest in startups. So that sort of opened the market space. We spoke about Darren Marble earlier. He did the first few that were in the market space. He did this his company was like a marketing company that promoted the raise. So he wasn't actually raising the money himself. He actually was, his company promoted each raise. So he took them in. So he was seen as the sort of leader in the space. I saw him in 2017. 2017 in San Diego. So it was San Diego Startup Week. So it was San Diego Startup Week. It was a presentation about Reg A. He was speaking about this allowing non-accredited investors to invest in startups for the first time. So up until that point, the only people who could invest were essentially people who were accredited investors, high net worth investors. So what this did is it allowed non-accrediteds to buy into startups for the first time. So that sort of opened up the market space. But then the problem was that now I've done 2 rounds of Reg A. We've raised capital to invest in our company. We've bought into oil interests into that. But the problem really being is that the liquidity for the investors was really through the NASDAQ or the New York Stock Exchange. So it's a big gap from raising capital in order to getting listed onto these 2 exchanges. So, ultimately that's our goal of our company, still be the long-term goal of the company and a long-term goal of any company that gets involved in this.
Yeah, well, Alistair, you just nailed it with the liquidity aspect of it, because that's really the whole thing that people are concerned about. If you get into a deal and you can't get out of it, then what if you need money, right? And I think that's one of the the things that people look towards blockchain, because tokenization allows you to do that. Theoretically, on a secondary market, you can get up there, you can put your crypto on there, your tokens, and sell them when you need to sell them. And I think a lot of these markets out there that are developing this are on the right track. The problem is, and you mentioned this earlier, is that it's not really open to everybody. Like these cryptocurrencies, if you're in the U.S., you can't invest in them. A lot of these platforms, it's just not ready right now. And I can see why people may want to go overseas. Because of that, people can list their projects on these exchanges, but it's not a global thing yet, because the U.S. can't get involved in it at this point right now, at least on a consistent basis. So when that problem is solved, I think you're going to see even more interest in tokenization, which is one of the reasons why, again, I really am surprised that it's taking this long to adopt.
Yeah, I think, coming back, I think what's happened really at the turn of the year. So there was the ability to create tokens, but the liquidity wasn't there. So you had a lot of token creation companies. It was very expensive to make tokens. But now, because the first few regulated token exchanges have gone live. So if you think of companies be able to, T0, but really Securitize is sort of leading the way with them as well. So, and then there's North Capital, Rialto Markets. And that's really the four in America now that people are aware of. Now, there's not great liquidity onto these exchanges right now, but now they've got the ability for tokens to go on there. So, with our company, we're looking to listen to one of these token exchanges quite shortly to provide liquidity for the investors working through. But then, the collapse of the crypto market in the last few months. So what you've seen is, because of COVID and everything else that's come out the back of this, it's, the market's moving up and down. And then, if you're involved in any sort of blockchain crypto tokenization company right now, some can be, the perception they're doing well is, but because of the capital market problems right now, and that's affecting crypto as much as it's affecting everyone else, we spoke about it last week, there's obviously dangers of listing on these exchanges. It's becoming very difficult to list. There's the market makers aren't finding the additional capital out there for companies as well right now. So, there's multiple problems that's slowing up the progress of what it is. But what I think is going to happen is that once we come out the back of this recession, well, it's going to go into recession, guys, but once we start coming out the back of it, this portals for us to tokenize assets is going to be massive, because NFTs is basically sort of created this system. So it's like, what you're going to find is that, but the problem is, as Garrett said, is, which ones are securities, which ones are utility tokens. The SEC are going to go after a lot of these cryptos right now, and they're going to say, well, you're not a cryptocurrency, you're not a utility token, you're actually a security. You should actually be registered as a security token, and because you're a security token, you can't be trading onto these other exchanges that are unregulated. We want you to start to go through our regulated exchanges, to the point that these other smaller exchanges are going to come out, and obviously some will grow faster than others. But until like the NASDAQ runs their, STO, ATS, alternative trading system, that's when it'll become total mainstream. And it's probably not, it's not like NASDAQ doesn't have the technology as a technology company to run an ATS. It'll be the timing in the market space that they want to do it. But once they start to do that, you'll just see mass adoption into these types of tokens, because to me, that's where the future is, because it's right at the absolute infancy. Right now, I think you'll be lucky if there's 20 tokens trading in America, so, and I think there's maybe 200 tokens right now raising capital in America. So, you're that sort of slow volume coming in, but once it starts to increase and people start to understand it, and then people understand that they can own these tokens and own these assets. And I think for a lot of people out there is, these tokens will give them distributions, which is different from a cryptocurrency, because cryptocurrencies essentially are just going to move up and down based on the price of the crypto, whereby these are actually assets or asset-backed tokens. And from an oil and gas perspective, as the tokens grow and provide distributions, it starts to solve problems. So if we look at the real estate market space, because to me, real estate sort of leading the way in terms of the token market for people to understand it. So give a bit of background, Ron, in terms of what you think of real estate and tokens and why it's the future for a lot of these.
Well, again, I think that the tokenization of real estate is going to be huge in the future. mainly for the reason that you just mentioned. Right now, if developers are looking to raise money for a project, they can always go their traditional rounds of like raising money from their investors and that kind of thing, Reg Ds, et cetera. But when you talk about tokenization, you're reaching a whole bunch of different markets, a larger market. You can still get the same end game of raising money, but again, the key is the liquidity portion of this is great because investors have a route to get their money back if they need it. But what's interesting about the tokenization of real estate is that tokenization includes these smart contracts that can do a lot of things that you don't need humans for, in terms of, let's say, paying dividends or things like that. So the tokenization of real estate works for a number of reasons, mainly because of the smart contracts, the ability to raise money, the liquidation aspect of it, and again, if you look at it from just a top level view, it doesn't make sense to go any other way, basically. And when you look at some of these developers, you tell them, hey, have you thought about tokenizing your project? They look at you today with like deer in the headlights. Like, what are you talking about? And they have to be educated on this opportunity. So that's what's stopping this thing from exploding. And when it does explode, you're going to see people will be like, I can't believe I didn't know about this sooner, or I didn't do it sooner. And I promise you that's going to happen. I just don't know when.
Yeah. So, Gary, for people out there who are not aware of tokenization, give a bit of overview and your thoughts on it. How it will
operate. Yeah, I think that there's been a huge opportunity. I think a couple of years ago it was a little bit different, back when the ICO stuff was taking hold, because it's the big hallmark of kind of what you guys are talking about here is people being able to get their money back out. And in an ICO, people were sending money. They were sending Ethereum, which they could easily trade for US dollars, get their money back. They were sending that and receiving tokens that were essentially didn't have a set value at that point in time. They were being told, oh, we're going to get it on an exchange. And that resulted in a lot of people, not having the opportunity to, then sell those tokens. But I think with the advent of automated market makers and, liquidity protocols like Uniswap, Sushi Swap, Pancake Swap, and stuff like that, it's a lot easier to track those kind of things, and it's a lot easier to see if something is going to be feasible as something you're going to be able to put money into and get money right back out. So
yeah, I think it's for people to understand how the tokenization process works is, up until now, if you were buying into any sort of major asset, if you're looking at real estate assets, you're looking at oil and gas assets we're involved in, you're owning the project in percentages. So you're owning 1%, 2%, 3% of the project. The problem you've got is that, as you're saying there, if you were looking for secondary liquidity with that, so you're sort of stuck into the life cycle of this project. Now, if the operator of the project or the owner of the big real estate project sells on or gets bought out, then you can get paid out from that. But ultimately, your money's locked into the life cycle of a project. And that's essentially with a lot of asset investing anyway. You invest in your house, you invest it for 25 years. You invest into an oil project, you're stuck into it for 20 years. If you're through tokenization, it basically just changes how you actually hold this. So you're now holding this in a form of tokens rather than holding this in a form of percentages. And then because of these ATSs, now Garrett spoke about ICOs, and this hasn't helped the adoption of STOs, which is security token offerings, and everyone coming from this Reg A blockchain background into it, because essentially the STOs, they're going on to regulated exchanges by the SEC, whereby it's going to be run through transfer agents and broker dealers. So it's not going to be so that the same people who are running the ATSs, they've already been regulated by the SEC. They've already got a transfer agent. They've already got a broker dealer. They're already regulated for the markets, but now they're actually running it on a ATS, which is an alternative trading system. Up until that point, these ICO markets, there was none of that regulation at all. So it wasn't even going through transfer agents. It wasn't even going through broker dealers when it was going on to these third-party exchanges. So that was part of the problem in the market space. And then no one had any everything was coming in terms of, we're putting these tokens out there, the market is driving up the token price, and it wasn't actually backed against anything. So what you're finding now is these projects, especially into hard assets like real estate and oil and gas projects, renewable energy assets, whether it's into funds, stuff like that, there's something actually backing behind it. Where the problem with the ICO market before, which was initial coin offerings, there was essentially nothing backing that. So for people to understand that and going forward is that what you're going to find that these types of tokens will be backed against something. Now it might be a pool of assets, etc., and that's what people will be investing in. So then people can sort of understand the technology, because I think one of the problems for most of the general public out there is that they couldn't understand why this is backed against nothing. So that was part of the problem is, what is backing against this coin that I actually own? Now, whether this coin owns interest in well interest or own part of a real estate project, now people understand it, because now they think, well, there's a physical asset behind it. And then people have to understand that using the terminology token rather than coin, because the problem with cryptocurrency and coins is people think of cryptocurrency compared to a currency. So they get confused. So they just think, well, there's only $1 US, €1, €1 UK pound. How can there be 14,000 cryptocurrencies? But a huge majority of those cryptocurrencies were actually just security tokens. And this is what the SEC are going after a lot of these cryptocurrencies for. So when people understand, well, there's more than 14,000 assets in the world. So what you're going to find is there's going to be thousands and thousands of these tokens, because we'll be backing against different type of asset pools. So that's what people will start to understand. And I think the terminology token will make it easier for people to understand, because they're moving away from the word coin and, cryptocurrency. So currency and coin make people think of the US dollar and how it compares to the US dollar. So automatically in your head, you're thinking, well, I understand how fiat currency, well, you don't actually understand how fiat currency works, but you understand the perception of fiat currency. I've got this thing and I can change it for a value of goods and services. And suddenly this digital version of this money is coming in that's got a value that I can still do this, but I can't really understand it. Suddenly this tokens are going against assets, and you realize there's lots of assets. So you suddenly straight away, you stop thinking about it based against coins and currencies, which I think is stopped the adoption coming in. And then the other thing that's happened is, because of COVID, we were all locked in for basically all these months. The government gave us out money, and a lot of people took that money, and when they were stuck at home, were online, and they started investing in things like, Robinhood, different stocks, started investing in cryptocurrencies, started using online platforms. Along came likes of Kraken and Coinbase, which made it very easy for people to start to use and buy into cryptocurrencies and digital assets, because up until now, it was quite complicated to buy into these things. Some of these exchanges you were going in to list and buy Bitcoin from is quite difficult and complex for people to use. So they couldn't understand. So suddenly you're stuck at home, and then everyone's starting, well, wait a minute, I'm earning money from this. And, okay, it would create a false economy, and suddenly, now we're in a bit of trouble off the back of printing all this money. But ultimately what's happened is the adoption of the technology and this adoption of the digital world, COVID sped it up by 5 years, I think. Because up until that point, I remember going to McDonald's. I remember we were all locked in. And I was like, you couldn't go anywhere. And then McDonald's was open. So it was like, where can you go in lockdown? You can go to McDonald's drive-through. So it's like, that's the only thing you could do. It's a massive queue. The kids were going to go out, everybody. We can go to the drive-through. You drove to McDonald's, which is like probably one of the biggest companies in the world. Everything's there. Everything's branded in their way. And then someone had written this sign in paper, please give us your change, and stuck it to the window. You know what I mean? It's like, well, wait a minute. There's nothing looks like this ever in McDonald's history. And then they're writing that because they've got no change. So suddenly, and then the next sign is, we're not accepting cash, card only, because we've got no cash to there. Or we're just going to round it up to the nearest dollar, and you're going to lose 50 cents. And they're writing that in bits of paper and sellotaping them to the window, which was like unbelievable. But then because of these types of things that happened out there, suddenly we are now used to digitization. It's just like it's all coming through, whereby back in 2017, 18, when ICOs were coming up, it was too early in the market space for people to understand that. The technology hadn't caught up. The usability of this technology wasn't there. People weren't happy to digital money. You know, I mean, people still like cash. You know, if you go in anywhere now, because I work, you know, live down in San Diego, it's really close to the border. There's a lot of people going to do money changing. If you ever go to Walmart, they're changing money. If you go in some of these places, they won't accept $100 notes from people anymore, which is unbelievable. You just think, well, that was that back in the old days when you come to America, it was all about who had the most $100 notes in their wallet. You know, even if you only made $800 a month, you'd keep it all in hundreds in your wallet because that's what the American way was. Now, if you go into a store and give them $100, like, we're not taking that. That could be dodgy. You know what I mean?
Nothing over 20. Nothing over 20 these days.
It's just like it's just gone there. People need to understand that you know because of COVID, the world's fast forward into digitization, and then this tokenization process is fast forwarded into it as well. You know, and I think that's what's so interesting about what's happening in there. And then, you know, we speak about guys like Darren Marble, and that is just like, you know, I went to see his presentation. I'll just tell the story because it was like when I went there, I knew about reggae, I'd read about it and stuff. And I remember being in this presentation, there was 200 guys in the room, and it was like hands up, and who knows about reggae? And I was the only guy to put my hand up. And he sat and did this presentation about reggae. And then I went up to speak to him. And it was the only time I've ever met him face to face. And I said to Dan, I said, should I do this reggae thing about this, doing that? And he just goes, listen, everyone's swimming this way. My advice for you is you swim this way because this is the future. And he's just starting. And it was just like, and I still remember the conversation. I went and wrote my reggae myself the next day. And then it just basically got an SEC attorney involved in that to check it all and just started doing that. And then, you know, it's now we're into a process whereby all these ATSs are live, all these things are coming out. And it's still just at the beginning. That's the thing that people need to realize is that this stuff is just, it's like you say, Ron, you know what I mean? It's just at the beginning itself.
Yeah. And, you know, you talked about COVID and forcing us into technology. You know, pre-COVID, who knew about Zoom? Who knew about these video conferencing that everybody does now? Now it's second nature. But it wasn't that way when this thing started. CEOs had to learn how to, you know, use their laptops basically to do presentations. And, you know, you're right. Technology just went so far ahead because of that COVID thing. And yes, it got into this tokenization. But let's just circle back to a point that you made before that I think is really, really important that people have to understand is the difference between these ICOs and the STOs and why these projects are backed by real assets. A lot of people got screwed on ICOs because they just kind of put it up there and said, okay, invest in my coin. And the person who was running the whole ICO could have just got up and, you know, next thing you know, they're on a beach in Costa Rica somewhere. The difference is with these STOs and these asset-backed plans is that, you know, the SEC does get involved. And I can't believe I'm going to say this, but the SEC is your friend on things like this. You really should be thankful for that part, that these have to be qualified. And it gets back to the whole thing about, is it a security? Is this process a security? And so many people want to pretend that it's not. But if you look at the whole thing, it's all defined by something called the Howey test, which means like if you're making money on the efforts of somebody else in a passive way, you're probably looking at a security. And these guys who are doing tokenization projects, they have to understand that you don't want to get on the SEC's bad side, and certainly not as an issuer. And from an investor, you should understand that too. You should make sure that your project is backed by something, and tokenization allows you to do that. And we talked about it already. Real estate in particular, a great thing. But you can tokenize anything. Any real world asset can be tokenized. Art can be tokenized. I mean, they do it everything. And like you mentioned before with the NFTs, boy, you know, is there an NFT for everything right now? Seems that way, right?
Yeah, I think, and I'll bring up that point there for Garrett, is to let people understand, because a lot of people know what utility tokens are, because essentially they're their form of cryptocurrency. But if you explain to people what a utility token is right now, Garrett.
Yeah, utility token is very simply something you can use for something. You know, it powers a product or service. It can be exchangeable for, you know, an action within that service. And that's, you know, one of the most important things. I think there's a different dimension to it, though, at a very core level. I mean, not even considering, I think people created these boxes, you know, that the first time I heard utility token or security token was 2017, 2018. People were trying to like put it in a box and feel like, oh no, I'm a utility token. I think the reality of it is that most tokens nowadays, it's very, with the automated market makers, it's a lot more simple to just see, if there, is the option to exchange the token for something that can be exchanged for US dollars, or to exchange the token directly for maybe a stable coin. The opportunities are really limitless for that. Whereas I think 5 years ago, it was a little bit more polarizing, and it was like, oh, well, like, is there going to be liquidity on this exchange that they listed on? When now it's all protocol based, and I would say most tokens are in some form backed by Ethereum. Like if they go out there, they're backed by Ethereum, and you're able to exchange them back into the pool, and you get your Ether, or you could exchange for a stable coin. But I remember these two little boxes, and it was just the fact of the matter is that many people, were trying to fit the mold of a utility token, and then came about, and I found this very, very interesting with Coinbase, because Coinbase, I wish I'd bring up the email, but I emailed Coinbase to see what the listing requirements were, and they outright said on there, things have gone down such a path where things are very different. It's different. The meme coins and stuff, I'm not sure where you even fit that, because obviously, that's something entirely different. But Coinbase won't list your coin. They don't care if you have all the paperwork done, whatever, you're registered as an STO or something like that. They don't care. They want the team is not visible. That is their words, not mine. They said, oh, we will only list your token if the team is not visible. Coinbase said that.
Yeah.
So it's taken a turn towards, you have things that are becoming multi-billion-dollar projects. There's nobody's the face of it. There's nobody essentially, who you're going to go after for Doge or Shiba Inu. They do nothing. They do absolutely nothing. And people buy them speculatively. It's kind of like tulips, So I do think that, what I think is probably likely to happen is, they really have to rein in these companies like Coinbase. If I had the email handy and I didn't have to dig for it, I think I sent it to Alistair once, because it's such a joke.
We don't get sued, by the way, by Coinbase. You know what I mean? So let's not release their email on the
yeah. Yeah, but I don't think it's any secret, how they choose to operate, and
but then the problem is that you can't list security tokens on Coinbase or Binance.
Bingo. Yeah, bingo.
So you can't if you got a security token, you can't list it there. So they want a utility token, and then they want you to. So if you're trying to list on Binance, which is probably one of the biggest exchanges in the world right now, if you list in there, we'll list it. No, that's a security token. Why don't you change your thing to make it like this? Is it a utility token? And if you go and ask anyone who's a securities lawyer, they're going to tell you that's a security, just as Ron said earlier. That is a security. It's not a utility token. And therefore, the minute it's a security token, you can't list it on Binance. You can't list it on Coinbase. You can't list it on Kraken. So suddenly it's like the cryptocurrencies and the utility tokens. And then it's becoming this gray area of like, what is a utility token now? What are you actually using it for? Where it becomes a stable coin. It's just like the stable coins can list, but even then, stable coins, because of what's happened with Terra and that, it's like that's even more difficult. It's like, who's going to trust the stable coin now? It's going to be, I don't know who's going to trust the stable coin right now until like you got big guys backing it. So it creates this gray area, and that's whereby these ATSs, which essentially have only really started to come live and start to work now. I know the guys from the STO show, they are doing their security token on Securitize coming up as well. So, that's good, because these guys probably the leading marketing guys in the space as well. So, good luck to them with their raise and what they're doing. But they're bringing a lot of sort of eyes to the market space. They've got a huge following. That'll bring it to the market space. And, and that'll help a lot of people come into it as well, because, these guys are the sort of leaders in the space in terms of marketing. They are now doing their own sort of type there, and it's going to be listed on Securitize. So that brings opening up to the market space. But then it creates this confusion of, well, the only tokens I've known up until this point are utility tokens. So why is this security token different? But then again, it comes back to, as you say, Ron, it's just, no one knew what an NFT was before COVID.
Yeah.
Basically, that was it. No one had a clue. Now suddenly Snoop Dogg's basically owns $25 million worth of NFTs. You know what I mean? So it's like, what is it?
Exactly. And Alistair, if I want to, I can NFT this coffee cup that I have right here. I mean, you can do anything these days with this. But I had a big time trouble understanding the difference between utility tokens and tokens as well. And somebody told me, like, well, okay, Ron, you're from New York. When you go to the subway and you put the token into the turnstile, that is a utility token. That's the same thing. The actual physical token allows you entry onto the subway.
That's a good way to put it.
Yeah, and the entire New York City transit system is your token, basically. So that's how I understood it a lot better by a simple example like that. And sometimes you just need simple examples to teach people what the differences are in a lot of these things.
So, exactly. So it's a bit like people understanding fungible token, non-fungible token. Fungible tokens like the US dollar, because it's interchangeable. If I had $5, Garrett had 5 singles, we know we can swap it like for like. But an NFT is a non-fungible token, and therefore it's not interchangeable. But what's interesting is, because of platforms and using of Ethereum and Bitcoin, etc., you're now got a medium of exchange, so people can actually use this for putting value to it and exchanging back and forward. So that that brings a bit of overview of that part of the market space as well. So in terms of Bitcoin operating behind this, Garrett, because everyone wants to talk about Bitcoin operating with the economy. How does Bitcoin fit into these types of utility tokens, security tokens, for people to understand? Because a lot of people just understand Bitcoin. They just think crypto, it's Bitcoin. We're trying to educate them. So give a bit of background how you think Bitcoin's created this market space, and then how's Bitcoin interchangeable with this?
Yeah, that's really an awesome thing, because it's like, if you look at Bitcoin and you look at the origins of that, what this really provides is it provides a backbone to the rest of the crypto economy. And it is like, it operates in a way where it's, I like that a lot of the altcoins and whatnot are built on top of platforms like Ethereum. They're built on top of separate platforms, making Bitcoin essentially very, very traceable. That was not always the perception of it, but that was something I knew from very early on, is that it is very traceable. And the reason for this being is that, unlike Ethereum and these automated market makers that happen on chain, we find that Bitcoin is going between centralized exchange to centralized exchange, making it very traceable. You see where somebody is putting in dollars, you see, the whole thing, the exchange mechanism of Bitcoin is all handled by, centralized individuals that are selling it for dollars. So all of the points that it's sold for dollars, except for very small use cases where somebody, goes on local Bitcoins and exchanges cash, and somebody sends them Bitcoin or hands them like an open dime hardware wallet. Those are very small use cases. The billion-dollar transactions actually happen somewhere where it's very easy to regulate. It's very easy to hold the entity accountable, and it's very easy to treat them like an exchange in a regulatory sense. So that's the pro to Bitcoin, is that, and then also the fact that it has been said, it's been spoken, by every regulator out there, the SEC, CFTC, that it is a commodity. I do think that there are likely some other areas in the crypto space, that would be considered commodities, but the one that they have, the pulpit has spoken, it is a commodity. That's Bitcoin. So, we have that to kind of anchor all the rest of this. And it works almost like case law, being able to point and say, well, Bitcoin operates this way. It has these qualities, and it has been deemed a commodity by the CFTC, and the SEC has also said they respect that. Using that as case law and saying, well, if that holds true, then, it's like a program. If then, maybe something else could be considered a commodity, or maybe something, depending on how you structure it.
Yeah. And then for people to understand a little bit more as well, just pop up Ethereum there. So yeah, they're the two main ones. So explain a little bit difference in how Ethereum is operating to Bitcoin, and then how Ethereum is the backbone of all these future tokenization market spaces.
Well, it's very interesting with Ethereum, because Ethereum, I took the guy that runs the SEC right now. I think they call him like the chairman, Gary Gensler. I took his MIT course. I've been through it all. And, he goes into this in depth. And one of the things I think was funny is during the course, he said, oh, Ethereum actually was grouped in with Bitcoin. They grouped it in as a commodity as well a couple of years back. And he said, well, I believe that it started as a security because there was a crowd sale. People were pooling money in together. There was people like Joe Lubin, Vitalik. Lubin got a lot more than people think. And they essentially they had these tokens, they were selling them to people, they got dollars to fund this project and build Ethereum. Now, over time, he said in the course, he's like, oh, well, it's changed, and now, it's likely a utility. It is not a security, it's a commodity. And that seemed to be the polarity shift, is that something can start as a security and then become later on a commodity based on that was a CFTC ruling. Now it's interesting. A couple weeks back, I see him backpedal and say, as SEC chair, the course was way before he was SEC chair. Now I see him backpedaling and saying, well, Bitcoin's the only one that we here at the SEC say is a commodity. We agree with the CFTC. It's a commodity. And we have to figure out maybe where Ethereum and all this other stuff fits. And I think the reasoning for that being is all of the stuff that ends up being built on top of Ethereum. Not necessarily going back to the origin story. I think by now, I'd like to believe that the tokens are equitably distributed. Lubin isn't sitting on a massive pile anymore, but you really never know. It's... you really never know. So,
isn't that the issue with an XRP? Aren't they having some problems with the securities?
XRP, yeah, that's another interesting thing to bring into the mix here. Is that XRP? The argument with them being is that that the argument from the SEC is that it's a security, and then they've been doing an 8-year-long or whatever, how long they've been out, unregistered security sale in the United States. That's what the allegation is. Truth be told, I'm not sure how much longer that could drag on. It's amazing to think it's been almost 2 years. But they on one hand have the financial artillery to continue fighting it to the very end of I can't remember what they call it, XRP Labs, I think. And that will be potentially the most important piece of case law in crypto history, because it's essentially, whatever it is, XRP Labs versus the US government, whatever the outcome of that is, that becomes essentially the new Howey test, the Ripple test, if you will, probably is what it will be called. And, and going off of that framework is where, everything going forth, either the SEC, wins big, and that's what they point to is it's a ripple. Did you do the Ripple test? And then it sounds like a great test too, the Ripple test. It's like you tap on the water and whatever.
Yeah.
But it's like surface tension or something. But I see a lot of opportunity there for XRP though, because it seems like there has been some evidence that they brought to the table, because they did go to the SEC when they started the project, and they did kind of ask permission. And that's their argument, is like, well, we came to you, when I can't remember who the last guy was, Jay something. It was Jay. I don't remember what his name was under Trump. And then they came even before that. They came under like the Obama commissioner, and they asked like, hey, can we do this? And they're like, not sure. We'll get back to you. And 8 years later, which is how they work. That's how they work, is, that's, they give stuff time, and that's how it works. But with the XRP, it's going to become case law, and you can't speak right now as to like what that's going to be. It's in the it's a future tense. Like when it does happen, though, that is going to be what's pointed to in every case that ends up being something starts in the United States, and XRP, they're trying to go offshore or whatever. They basically have said, if we lose, we're just going to go offshore, but still, I think that's so limiting to the U.S., all the U.S. people that bought this, because it's like, I had some XRP, and it's like I had a little bit of it, and it was like, if it just becomes, thanks to the regulators, now it's like worth nothing. You can't even trade it on I can't even get dollars for it, me as a consumer. So, and it's thanks to them, it's like before any of that, it was like, oh, okay, I can go to Coinbase or I can go to wherever I can get dollars. But now it's crazy. But
it's it's just interesting stuff. We could talk about it all day, but
right.
Time's marching on, so we'll go to the final part of the show, Ron, where it's called
Chewing the Cud. Let's get Boris Johnson on there.
Yeah, we saw him in earlier, so let's bring him to the stream right now. Here he is.
What's he doing now? I'm not sure.
This is his new job after resigning earlier today. You know what I mean?
Oh, he quit. What are you kidding me? He quit?
Yeah, he had to resign today. So after 60 MPs resigned yesterday, including his new cabinet, some of them were actually in cabinet for less than 36 hours before resigning, that eventually he had to resign. So today, Britain but he's resigning, but he's still the Prime Minister. So he's resigned, but he's staying as the Prime Minister until they vote for a new Prime Minister. So for people to understand, the sort of British system and politics is they have to have an election every 5 years. The government can call an election at any time during that period. When there's a vote of no confidence in the Prime Minister, usually that's when they have another election. But if you've got a majority, which the current Conservative government have, then they can just have an internal vote and they don't have to go and have a general election, and they can just vote for their new party leader. So that's it. Boris is finally gone, guys. So what are your thoughts on this?
Well, I'm wondering where we get who's going to be the next one.
Yeah, wasn't Boris considered the their version of Trump? Didn't someone say that a while back? And
well, I'll tell you what, I've got this video, right? It's a bit of a beauty. This was prior to him going there as well. But if you have a look at this, this is him. This is him playing rugby. Watch him in Japan. Watch him nail this little kid right here. Oh. Right here, just slow motion. The kid's only a 10. You know what I mean? Yeah. It's pretty embarrassing, really. He obviously played rugby because he went to a posh school. And then now he's playing soccer, or football, we call it in the UK. He's up to something again there as well. He was very much seen as a sort of Trump type guy. Like he's got the suit on, even though he's on the zip line. He's an absolute clown, basically.
I say this respectfully to our Chinese hosts who have excelled so magnificently.
Oh boy!
Ping pong was invented on the dining tables of England.
It's funny, at that video, he really kept his hair together a little bit better at that point in time.
And I think we have the essential difference between us and the rest of the world. Other nations, the French, looked at the dining table and saw an opportunity to have dinner. We looked at the dining table and saw an opportunity to play whiff-whack. And that is why London is the sporting capital of the world.
Boy.
So, So, let me take this off.
We get Grant Cardone jumping in on the ads.
You can't get rid of Grant Cardone. He's everywhere, So so that was Boris gone, guys. So now he's back to doing a bit of busking. Well, he's not really though. He'll just be involved in everything. So it was, but that was some of his best moments when he was prime minister. Some of it was before he was the prime minister of the UK.
I hate to see how he acted in my Tuesday night bowling league.
So he got Britain. He did the Brexit, so that was his big push to get Britain out of Europe. It's if looking back in time, it's not been the best because of COVID and everything else that's happened. It means inflation's higher in the UK than other parts of some of Central Europe. But ultimately that was his agenda. He pushed it. He was involved in multiple scandals that he managed to ride through again and again. One of them was Partygate, which was the big thing in the UK, whereby he came out and told everyone they're not allowed to have a party, they're not allowed to visit relatives, they're not allowed to do anything like that. And then the following day, he was basically having a giant party at 10 Downing Street. But he said it was okay because it was bring your own booze.
Yeah. Well, Alice, like I say, though, I mean, you look at the England, you look at the United States, all over the world, and everybody thinks everything is horrible, and everybody's crazy, and there's all kinds of ridiculous things going on. But when you think about it, like, we are actually living right now, today, in maybe the best time that we could ever hope for as there for saying one. We have all this information at our fingertips. We can do whatever we want. It is really, really a great time to be alive. And people just like, oh, my life is so bad. I got all this problems. People don't understand how good they have it, in my opinion, at least.
Oh yeah, it was. You're looking back 100 years, back to the early 1900s. It was like difficult time for people. So many women dying with childbirth, technology, medicine. Everything was very, very difficult in terms of people being able to live there. Right now with, I know people like bash the pharmaceutical companies, but the bottom line is if you get sick, you go see the doctor and you're hoping the doctor's going to give you something to live. And the older you get, the more you rely on pharmaceutical products, It's not like 1,000 years ago, or you're going back, a few 100,000 years ago when we were all living in caves, etc. Ultimately your people are dying at 20 years, 25 years. It's just like now we're living to like late 70s, early 80s. And it's also the quality of life now as well. It's not just a case of, because it wasn't long ago when you were retiring at 60, 65, that was basically seen as, that's it, you're on your way out. If you see, oh, well done, 65, pat in the back, there's your pension. But now people keep working, they keep living, people get fitter and fitter. You see people, everything about life right now is a good time to live. I think it's, people get too hung up. You sit and watch the media all the time. These things are in loops. You're on social media, so suddenly you're living in echo chambers of news and information that's coming to you. You don't have that curiosity to go out and realize that and realize the opportunity people have right now. And I think for a lot of young people coming out, they think the world's a disaster, but ultimately you're 100% right, Ron. It's never been a better time to be alive for people, and I 100% believe that, and I've got my oldest boy, Malachi's autistic, and with, special needs and all the technology that's coming, all the specialists, all the therapists that can work with him and help him going forward. It's helping people in so many ways in life right now. And I think people are just, they watch too much of the news. It goes from one disaster to the next disaster and you think your life's all over. But ultimately, it's not all over. And, mental health's the next thing that people are going to start to focus on, but we're helping people with mental health a lot more than we are before. People are starting to understand mental health more than any sort of physical disabilities. And that'll be the next challenge for so many people. But, and going forward, we're just living longer and longer and longer. And the quality of life's improving, into you get into your 70s and you still have a really good quality of life. Into your 80s. I was actually watching a program yesterday, came up, and it was a guy he's been running marathons and he's just turned 100 and he just ran a marathon. And he started running marathons in his 80s, and he owns the world record. I wish I got his name, actually. And he started doing he's doing multiple marathons. He did his first one in his 60s, broke the oldest, the fastest guy in his 80s, and then running marathons like 95, 96, 97. And then he's going to do a marathon when he's 100. But just it's just, you couldn't fathom that even 20 years ago. It's like, how could someone run a marathon when they're 100 years old? But this guy's doing it, so it's amazing, and I think people get too hung up in politics and too hung up in, hate your neighbor because the government's cocked up. It's not your neighbor's fault. It's just going to work, paying their taxes. It's not, just because he votes a different way from you, you don't have to hate them, go to school together, all that. That's the government's trick, though, in the media working in cohorts. It's just like, it's not our fault, it's that guy's fault, the guy that lives next door with you for 20 years, how's it his fault?
Just don't self-diagnose yourself on WebMD. You'll be convinced you're dying.
Oh, yeah, that's the other thing. WebMD, My uncle's a doctor, and he said to me, he says, what did he say? Don't discount my 10 years of medical training and 25 years in the medical practice for your search on the first page of Google. I think that's what people need to realize is, I know a lot of people don't trust their doctors and that, but if you get really sick, you trust them. It's as simple as that. You're not going to sit there and die. You know what I mean? You're going to go in and see the doctor and that. So it's always like that, especially you get older. But I think a lot of people are thinking of their health now anyway. So it's good that people are understanding to get healthier, fitter, realize the problems of blood pressure. I know me and Ron both play golf, so it's good for us to get a bit of exercise. Obviously, the blood pressure goes up if you're playing bad, Ron.
Yeah.
Smack the old club down and stuff, unless you're part of the LIV golf tour, Ron. What do you think of those guys?
Park far away from the golf course when we're playing.
Exactly. So that's another thing that, like, it's amazing that LIV golf, we were speaking about this the other week, Ron, LIV golf tour guys. It's like they're getting an absolute roasting in the media right now. Is it deserved? I think the problem is, it's like they should just come out and say they're doing it for the money, and no one's going to blame them. You know what I mean? $200 million to play the upfront fee.
Well, or how about, Alistair, how about tokenizing the entire tour? Wouldn't that be something?
Yeah. So it's, and then Saudi Arabia is making a big effort right now to change their brand abroad. Their public investment fund that they're looking to invest in different things. They're looking to change the brand. They're looking to change how they're predicted. Yeah, they've got human rights issues, I get it, but like, who doesn't have some form of human rights issues? You go back here with all the racism problems in America. You go back to the UK in terms of, colonization. You know what I mean? It's like the UK has been involved in doing everything bad for like the past 200 years. You know what I mean? So it's part of a build a colony, put the great into Great Britain and all that sort of capers. You know what I mean? So it's like, we seem to have like moved on from then. No, that's not a problem anymore, guys. We've moved on past that thing. But it's just like, but I get that. But then they can talk about sports washing, they can talk about all these types of things, but ultimately they're actually trying. I honestly think, and the US has to go out there and, Biden was good to give them a bit of a slam dunk back when he got into office, when it was $41 a barrel and we're all moving to renewable energy. Now it's $110 a barrel. We've cut off Russian oil. We're running out of supplies. We better get back out to Saudi. So, and you're needing to increase production, but apparently they're going to increase production by 200,000 barrels this month, 200,000 barrels next month. So, ideally, Saudi Arabia is going to help the market space in the world, and that's what they've got to do. And plus we want to create good relationships with Saudi Arabia rather than them just working with Russia and China as well. So because Saudi Arabia don't care, they work with everybody. So there's no point just cutting your nose off to spite your face out in the Middle East, and then just everything Saudi's done wrong because we're not helping them and their upcoming problems with Iran, which seems to be going on forever. So, all these political things just go around in circles. And the problem with politicians is they always end up with egg in their face, just like Boris Johnson. You know what I mean? He was great. This was great. It was great. We've moved out of Brexit. We've moved out of Europe. We're not controlled by the Europe. COVID comes along. We're better off being back with the European Union. Just like, how did he know that? In the long run, I think it might help out, but I always believe less government's better. So the thing I don't like about the European Union is it's like another layer of government. So you've got your local government, you've got your national government, and then you've got this European government. So it's like 3 layers of government. So I agree with that in terms of why would you want to have someone else in Brussels who are completely unaccountable, basically dictating policy for your own country, you know? But the thing that was good about being part of Europe was, you know, the free movement of labor, which was great. So it was like, that was a disaster, because suddenly you think of the problems in America right now, you can't walk past the store without having help wanted on there. But because of the cutbacks in immigration and the cutbacks in immigration during COVID as well, suddenly all these jobs that people need to realize that's what immigrants used to do. The jobs that your young Americans don't want to do. Britain was the same, all the farming work, all the work coming in. It was all people from Latvia and Estonia and Romania and Poland all coming in to do these jobs the British no longer want to do. And then Boris Johnson just goes, right, that's us left. All your visas you no longer has a visa. Wait a minute, there's no workers left, you know, because they don't realize, because that's a false thing that people think about as well, Ron. They just think that they don't realize that that's who's doing these low-level jobs in the country, you know? So that's why immigration is good. And organized immigration is, because immigrants aren't really coming here to get in the welfare system. They're coming here to work because they can make so much more money here than they can where they're from. It's usually from war-torn places, you know?
Yeah.
So just to finish off, Ron, if anyone wants to find more information about you, what's the best places to go?
Okay, two things. The podcast is mapableusa.com. That's the podcast website. And we could also reach me on worldtokenmarket.com. And then lastly, Alistair, I just want to make a quick plug for the Tokenization Nation. We have a LinkedIn group dedicated to tokenization. It's called the Tokenization Nation. You can get to it at tokenizationnation.com. It'll redirect to the group. And we're going to turn that into a tokenization/blockchain trade show soon to be held in Las Vegas. So I want to thank
Janet and I are definitely coming to that Las Vegas one, you know?
Yeah, that sounds great. So I thank you for letting me be on the show today. It's a lot of fun.
Okay.
Yeah.
Great for coming on, Ron. I really appreciate it.
Thanks, Ron.
Okay.
Thank you.
Right. Well, thanks very much for everyone for tuning in for Boom It's on the Blockchain. That's just ran over an hour again, you know, so it's, oh, wait a minute. We've got one last thing. Technical difficulties for 2 days, Alistair. There's Vickie coming in the chat.
Oh, damn.
Yeah. So well, better late than never, Vickie. Better late than never. So, right. Well, thanks very much again, Ron. Thanks so much, Garrett. Thanks to everyone who's been watching. You've been watching Boom It's on the Blockchain. My name's Alistair Caithness. Have a nice day.